So it's already November, which means in the Orange County housing market, there are going to be some big changes ahead. Now, what are those changes and how will they impact sellers and buyers as we head through the remainder of the year? That's exactly what we're going to talk about on today's episode. If this is your first time tuning into the show, hi, I'm Josh Alexander, your local Orange County real estate agent, as well as host of Orange County Housing Market News, your one-stop shop for all things Orange County real estate. So if you're thinking of buying or selling a home anytime soon, make sure you hit that subscribe and follow button because I put out new content every single week to help you win in today's market. So in today's episode, I'm going to be going over my November housing market update and let you know what to expect as we head through November as well as the rest of the holiday season till the end of the year. So if you're thinking of buying or selling a home anytime in the near future, this is an episode you're not going to want to miss. So let's go ahead and get into it. Okay, so just like every month, before we go over what to expect in November as well as the rest of the year, let's go ahead and quickly take a snapshot look at what's been happening in the housing market today so you can see where things are headed. So let's go ahead and start with supply first. So supply, really since the summertime, hasn't really budged by much. So over the last 2 weeks, supply has only dropped by 2 homes in Orange County. So supply is remaining relatively flat and not really going up or down no matter what interest rates are doing right now. However, on the demand side of things, we are seeing demand decline week after week as interest rates have been heading up. In fact, over the last 2 weeks, we saw demand drop by about 4% in Orange County. So the important question is, what is this actually doing to the housing market? So if you look at the numbers, in the month of September, about 54% of all homes were selling for at or above asking price in Orange County. However, when you look at October, we saw about 50% of homes. So basically, half of homes were selling for at or above asking price, and the other half were selling below asking price, which is basically telling you that the market is in balance right now. So there are going to be some areas where you see home values declining, and you might see other areas where home values are staying stable and possibly even going up still, just depending on the area and the type of home that you're looking at. So really the biggest change that's happened in the housing market is just the number of transactions have started to decline pretty rapidly after August. So in August, we had about 2,000 homes sell in Orange County. However, over the last 2 months, that's dropped down to about 1,500 to 1,600. So it's going to be significantly less than we saw during the summertime. Now, that's pretty normal because as we head into fall, less people are doing transactions, kids are back in school, so it's normal to see a decline. However, that big of a decline so fast is a little bit abnormal, and a lot of that has to do with interest rates because interest rates over the last 2 months have slowly climbed almost every single week, topping out above 8% for a few days before we're finally starting to see them drop back down. In fact, today, interest rates dropped back down to 7.5%, which is the lowest they've been since September. So interest rates are headed back down now. A lot of that has to do with weaker economic reports coming out, as well as the Fed saying they're putting a pause on rate hikes right now. So there is a much better chance now that we saw interest rates hit a peak of 8%. However, hopefully for the rest of the year, we'll see them in the 7% range instead of the 8s, making it slightly more affordable for buyers trying to enter the market over the next 2 months. So speaking of the next 2 months, during the month of November, we typically see one of, if not the biggest change in the housing market on both the supply and the demand side. And really the biggest reason has to do with the holiday season. So if you're listening to this on podcast, I apologize, but for everybody else, you can check out this graph right up here and you can see even though we've had some crazy markets over the last couple years, once we hit towards the end of November, you can see that inventory starts taking a significant decline and continues going down for the remainder of the year. Now there's a lot of reasons for this, but the main one is that sellers just don't want to have to sell their home while they're trying to entertain guests during the holiday season, because we all know it's hard enough to get your house cleaned up for that one guest event that you're going to have. Trying to keep it clean throughout the entire holiday season when you're doing showings and open houses can be nearly impossible for a lot of people, especially if you have kids. So sellers that currently have their house in the market tend to throw in the towel about a week before Thanksgiving hits, and that's when you start seeing inventory decline, and they're going to wait until next year to put it back on the market. And for those that are thinking of selling, typically, unless they absolutely have to sell, again, they're going to be waiting until sometime next year to get their home on the market, which is why inventory drops and you just don't see a lot of new homes coming on the market during the month of November as well as December. In fact, those are the 2 lowest months in terms of new inventory hitting the market that we see all year long. So on the demand side of things, we also see a pretty significant drop off as we hit Thanksgiving going through the rest of the year. And it's the same reason, is buyers don't want to be going out, going through open houses while they're going through holiday parties, entertaining guests. It's just one more thing they don't want to add to their plate during the holidays. So they typically throw in the towel and say, well, look next year when everything calms down, the family has gone home from visiting, and we can actually pay attention and put all of our effort into it again. Okay, so all this information is great, but what does this actually mean for people that are still thinking of either buying or selling a house before the end of the year? Let's go ahead and start with buyers first. Okay, so buyers, we're down to the last couple weeks before you start seeing inventory disappear pretty significantly. So if you're looking for choices in the marketplace, you really only have a few weeks left. Now, if you're fortunate enough to be a cash buyer, or you have the down payment saved up and you can afford the mortgage payment on these higher rates and higher home prices, then right now is a good time to look, especially before Thanksgiving, because there are a lot of sellers, like I said earlier, that are getting ready to throw in the towel for the end of the year. So you might be able to swoop in, put an offer in that might be below market value at this point, and the seller might say, okay, well, I just want to get this home sold. I'm about to take it off the market anyway. Maybe I'll take a slightly lower price right now just to get it off the books and not have to deal with it anymore. So over the last month, every buyer that I've helped, I've been able to get into escrow below asking price. So if you're looking for a good deal in the market, you probably have a few weeks left where you still have a lot of options to choose from before those options start getting much more limited as we head into December. Now, the last advice I have for buyers right now is if you are one of those buyers that affordability is a big issue right now because interest rates are so high, I just want to let you know that there are different loan programs out there that might be able to help with that. So right now, one of the most popular ones is called a 2-1 buy down. And what it basically does is it takes your interest rate and it drops it by 2% for the first year, by 1% for the second year, and then it goes to its normal rate for the third year all the way to 30 years. Now, the reason this is so beneficial to a lot of buyers is this is something that the seller is going to pay for. So it's something you put in the contract. You ask the seller to buy down your rate, and it's going to give you a lower mortgage payment. So if you get approved for a 7.5% interest rate, that first year you're only paying 5.5% interest rate, second year 6.5% interest rate, and then it goes to the normal rate of 7.5 for the remainder of the loan terms. So the reason why these programs are popular right now is because the thinking is over the next 2 years, interest rates should start dropping, and that's going to allow you to refinance your loan into a lower rate more permanently. But until then, this kind of helps you out, especially over those first 2 years when you own the home, when you have a lot more expenses, typically like new furniture, new appliances, you're fixing some of the broken things that you found in the house once you move in. So you tend to have a lot more expenses during those first 2 years. So this type of loan product not only is free when the seller pays for it, but it gives you a little bit more wiggle room in your budget every month for different things that you might need for your new home without any cost to you. Now, the other thing I want to bring up is this is not an ARM product that we saw back before the last housing crash, where all of a sudden people's rates jumped from super low to very high and they had no idea what it was going to be. With these type of products, when the lender approves you, they're approving you for the higher payment. You know what that higher payment is going to be, so you know what your monthly payment is every single month of the loan. So you're going to be able to know if you can afford that normal payment when it goes back up to it during that third year, and you can budget accordingly. And obviously, there's never a guarantee that interest rates will go down over the next couple years, although it's highly probable. You never want to bet on it, so you always want to make sure that you can afford that higher payment comfortably. So if it does get to that point and interest rates are higher for some reason, you can still afford that higher payment, and it's not going to make you house poor while your entire budget every single month is going to your mortgage. So again, that's just one type of loan program out there. There's a bunch of them out there that not only help out with interest rates, but also with down payment assistance. So if you're close to thinking you'll be able to buy a home, but you're just not quite there, it's probably worth at least having a discussion with the lender, seeing what programs you might qualify for, because there might actually be a loan program out there that makes sense for you to go ahead and purchase a home right now instead of having to wait for interest rates to drop later when more people enter back in the market and home prices go up even more. Okay, so sellers, I'm going to break this down into two parts. One for sellers that currently have their homes on the market, and the other for sellers that are thinking of selling but don't have their home on the market yet. So let's go ahead and start with the sellers that currently have their home on the market. So like I said before, you only have a few weeks left before demand starts dropping down significantly. So if your home is on the market, it's not getting a lot of traction, not getting a lot of buyers through it, and you're not getting offers, the majority of the reason is because your home is overpriced for the neighborhood and the condition it's in. So you need to have a serious conversation with your agent, reevaluate those comps of the surrounding homes in the neighborhood that have sold recently, and figure out a new pricing strategy to try to draw some more interest before we hit Thanksgiving. Now, the unfortunate part for you is even if you drop your price, it's not going to generate anywhere near as much interest as you originally got when you first put it on the market. So you may have to drop your price below market value slightly in order to get the right buyer in the home to be able to place an offer and get it into escrow before the end of the year. Or if you don't want to drop the price of your home because you do think it's priced correctly based on the latest comps and based on your agent's recommendation, then your agent needs to be going in overtime trying to advertise it, getting as many people through that home as possible to be able to try to get an offer before Thanksgiving hits. Because after Thanksgiving, it's going to become extremely difficult to get a good offer on your home, not only because it's been on the market for a longer period of time, which again doesn't generate as much interest, but because there's just not enough demand in the marketplace, and so most buyers have moved on. Now, on the other side of things, if you're thinking of selling a home before the end of the year, then obviously you're going to want to get it on the market as soon as you possibly can, because every week from here on out, demand is going to continue to drop, so you're losing more and more buyers the longer you wait. On top of that, just like I talked about with sellers that currently have their home on the market, for you, the most important thing that you need to do is make sure you price your home correctly. And I say this almost every single month because it is the most important thing for sellers, is to accurately price their home. But to emphasize this point even more and show you some data behind it, this is a graph right up here from Stephen Thomas. He's a local housing economist in Orange County, and he basically comes out with different reports, crunches a bunch of different numbers, and puts out some great information to give you an understanding of what it takes to sell a home on the market. And this graph up here shows you the consequences that you're going to have as a seller if you don't price your home correctly out of the gate the first time. So let's go ahead and break this graph down. So it goes into 3 different sections. So number 1 is how much you can net if you don't have to do any price reductions on your home. Number 2, how much you're going to net if you have to do a 1 to 4% price reduction. And then number 3, how much you're going to net if you have to do a 5% or more price reduction. So you can see on the bottom line right here, if you do no price reduction, which means that you're going through and pricing it correctly, the market has spoken and they're purchasing your house, you're going to get a price that's 100.2% of the asking price for your home. So basically saying that you're going to get the asking price, maybe slightly more if you price it correctly out of the gate. But here's where things get interesting. So let's go ahead and look at the next line up, which is if you have to reduce your price by 1 to 4%. So if you have to reduce your price from 1 to 4% in order to get your home back to fair market value to sell, you're only going to be getting about 97.5% of the last posted price. Not the original price of your home, but the last posted price. So if you had to lower your price by 2%, then you're going to be on average getting 2.5% below that price, which is obviously going to net you a lot less money. And then when you go to 5% or more, you can see things just get worse. If you go to 5% or more of price reduction, it's showing that you're going to get 95% of that actual price. So you're going to get 5% below the last price you had it on the market before it sold, which is a significant hit, especially in Orange County when the average price of a home is well above $1 million right now. 5% is a huge number and a huge amount of money that you're leaving on the table instead of pricing it correctly out of the gate. And you can also see how long it takes to sell is going to go up significantly. So if you price it correctly, on average, it's only taking 8 days to go into escrow. However, if you have to reduce the price from 1 to 4%, it's going to take 43 days on average, and then 5% or more is going to take 63 days or more. So you can see there is a significant difference in not only the amount of money you're going to make if you price it correctly, but the amount of time as well as all the headaches that go along with that of having to show your home, do open houses, make sure it's clean for weeks and weeks and weeks before it sells if you don't price it correctly out of the gate. So I hope this gives you some information to go off of and shows you how important it is to price your home based on the latest comparable sales in your neighborhood, so it's priced correctly out of the gate when you're going to get the most amount of traffic and have the best chance of getting the highest price for your home, which is going to be within the first 2 weeks of your home hitting the market. Now, are you finding this content useful? Then again, make sure you hit that subscribe or follow button. That way you can get updates every single week on different strategies for both buyers and sellers to help you win in today's market. And if you do know anybody that might find this information useful, please share it as well, because I want to get this information out to as many people as possible. So again, hopefully you got some good information from this, and until next week, stay happy, stay healthy, and I'll see you on the next show. Bye everybody.